All right, we're live.
Good morning, everyone. It is CPI Day. What is it? August 14th. Um, CPI came in, I guess, as expected. Nothing really mind blowing there that um, is a real wrinkle for the downside here. So I think, as we've been sort of saying for the last couple of days, um, no news is grind up. We'll have to see. I mean, I fully expect the VIX to open in the probably the low 17 area. I think yesterday it closed around 18, so there's a little more fuel to fuel the fire. Um, we got, and I marked these in orange here, the bottom and the top of the CPI print. So the bottom is 54, 48. I believe it was 54, 48, 50, and the top was 54, 73.50. And so that's going to be sort of your range, right? You can, a lot of times with these data releases, one of the things that I like to do is I like to print that opening candle, the opening 5 minute candle. If you saw when we first got on the call, I was on the 5 minute chart, which I don't usually, I'm not usually on, but I wanted to be on it for the CPI opening candle. So we have a top print and a bottom print that's almost exactly 25 points apart. What we're going to see when we open and during the day is, do we break out of that CPI print range? And in that direction, my experience is that we start trending in that direction that day. So I'm going to be watching to see those, if that range breaks and if we can start a trend here today. Um, what way? We'll have to see later. I think that let's go to 1 hour just for prudence here. We've come a long way back up here, but we have not really gotten out of control. And let's go to this one because it's a little cleaner. Sort of what I'm seeing. And it would sort of align. I was looking at what Smooth had yesterday. And I mean, that's just sort of a rough drawing here, but um, up here is that level that Smooth has been talking about as the, sort of the completion of this bearish pattern. And if you look and we extend this out, that would actually still be within the confines of this bear flag. So something that I was watching sort of yesterday and looking at is that, we could get all the way to this 55. I believe the level is what, 55.46, and we could get all the way up there and still be within the confines of sort of this nasty looking bear flag. I don't know if that, if we get all the way up there this week. We may. I think that when you have a PPI yesterday that people seem to look at as being permissive to markets, you got a CPI today that wasn't, not permissive to markets. Hold on. Sorry, I had to sneeze. But um, then I think there's really no reason you don't just sort of continue to grind higher. And um, but it doesn't mean it's an easy futures trade. Futures trades are easy when you have defined areas for risk. We derive a lot of our levels off the 1 hour um, and higher time frame charts. This is a little sketchier to do. I mean, look at from, what was this, yesterday till now. I mean, we've really just sort of gone nowhere. I mean, I know this is a wide range chart, but we've just sort of been drifting upwards, which is pretty common for um, how sort of low VIX markets work, but we've been in a higher VIX regime for the last week. Something I am sort of noticing here is, and we can see that flag very clearly on the daily here, is look at this. Look how that volume has just been dying day by day by day on this pushback up. That doesn't give me a really warm, fuzzy feeling about things. You hear us talk about volume price analysis all the time, and rising on declining volume. Um, it's not exactly the most bullish thing in the world. It's usually a counter trend. Um, so we're gonna have to see, but we're gonna have to continue to play things sort of day by day here, because until you have a real conviction sort of trade like we did for the first half of this year, it was a pretty easy conviction trade to just stay long stuff, and sit long stuff. That's dead. So you're going to have to turn the page on that market, because that market's dead right now, and we're going to need to figure out and be patient and find what this market's going to give us. And do we come back up to this 50-day, which is at 54.95? Do we get all the way up to this level that Smooth's been talking about? That would sort of make sense. Is if you look at sort of this area here. Oops. That area there, some pretty good congestion up in here from back in the middle of June. So that would be a pretty logical spot for us to get back to here. How I'm going to play things is continue to play the relative strength, relative weakness. Futures wise, I'm not going to get over my skis. I'm not going to take a lot of size. And quite frankly, I'm probably not going to take a lot of trades. We've had a really incredible couple of weeks. We've been continuing to say this, that when you have a run like we went on for 3-4 weeks, there's going to be a lull. That lull is the time where you're most susceptible to give back money. And so right now you've got to pick your spots, pick your names. We ran Nvidia. Nvidia's right now up at almost 119. That we took that thing for an $18 ride this week. Microsoft, I don't know what's Microsoft at, but 415, that's a $15 ride or $10 ride. I can't remember where we started that one, but so be patient. We will find the setups that will look good. Watch for this top and bottom range here from the CPI print. So the orange lines here, so 73.50 and 48.50. And let's go from there, and let's see what the market gives us today, and if it wants to trend. We'll see pretty quickly if we break one of these levels. I mean, the other option that's on the table is, do we ping pong back between this 25-point range? That's a possibility too. But you've got to think about, what am I going to do when the market gets to 73? If it gets 6.5 more points right now, what am I going to do? Am I going to short it, or am I going to wait and see what it does? For me, I've got to see that initial reaction off of it. I want to see if the market starts getting up into this 71.70 area, if it starts accepting that area, as you hear us talk about a lot. Do we accept up in here, or does it look like there's sellers? Read the price action of the market when we get up into this area, and that will tell you if this 73 area is a shortable spot or not. You've got to see sellers at a spot. You've got to watch your correlations in the NASDAQ and see if we're going to be, if there's anything there. My gut tells me this is not a shortable level. My gut. But I'm going to see the initial reaction off of it. And I reserve the right to change my mind, and if need be, I will slap it there. But my gut tells me that that's not a shortable level. So
you're not allowed to change your mind.
What?
You're not allowed to change your mind.
Yeah, I am. So let's go to this one. Actually, let's go to this. So that's the wrong chart. There it is. Amazon. We're getting into the gap here from post earnings. So 170 essentially was the gap. Um, this thing could move pretty good back in here to up into this 174 range, which was sort of this low candle from up in here. If we can get over that 174, I think it can move pretty swiftly back to 180. So I guess there's a little candle here, 177 too, but we have the 170s. I have a few 170s. I have mostly 172.50s that were pretty cheap yesterday. So we'll see how that one goes, but I think this has some good promise to fill that gap over the next week or so. This one, Nike finally started breaking up over this 75-76 area, but it's rejected getting into the gap, which is 79.05. Pretty normal reaction off of that gap to reject that on the first try. It rejected a couple times yesterday. I think we do maybe come back and maybe retest the 76 area. If you see this thing strong today and continuing to press this 79, I'm probably adding again to those October. So if it continues to press this into this gap, I'm probably going to add to the winner here again, as we're probably going to get into that gap and go higher to 90, 95. So, I mean, the October 80s are, what did they close yesterday at? $4. You know, if that does what I think it does and can fill this gap up to 93, 95, I mean, it's a pretty nice trade with a little bit of time to finagle it and make it free and work around the position. So those are some things I'm watching today, and I will turn it over.
All right. Good morning. All right. Back to the old harmonics here. Just wanted to kind of share exactly what I'm looking at. In this pattern here, basically fit all the parameters of a bearish bat. As you can see, this XAB section here, we're looking for no higher than a 50% retracement and no lower than a 38.2, and we got to 498, so we're well within the parameters there. And then this A to C retracement should be between a 382 and an 886, and we're 741. So we came within those parameters. So that's kind of how I set that up, and then that gives us the target here of 886, which is where I'm at. So that's basically how I use my little harmonic cheat sheet there, just to make sure the measurements are within. And you know, once you kind of do it enough, you kind of figure out pretty quickly without even looking what we're working with here. But this is a 4-hour chart, so we had plenty of time to figure out what we're doing. And as Dan said, this 55.46 is the ultimate target. We are, about 70, 80 points away from that right now. So it's not out of the question that we get up there. However, it is a bearish pattern, so we have to anticipate that at some point we're going to get a sell-off off of this pattern. Now, what does the textbook say? Well, once the bearish harmonic is completed, let's say we get over here, it should sell off back to C, which would be back to this 51.75. But that's all within the realm of what should happen. Doesn't always happen, because markets still move based on, especially in the longer time frame, on, macro conditions, market mechanics. We are in, I think we're in OPEX week, right, Dan? Yeah. So once we start to see this selling off from the pattern, then we can draw our Fibonacci's from this low point here to wherever we, put a top in, and then kind of measure on the way down and take profits. So that's just kind of a larger outline on a long time frame of what we're looking at. Right now, we still have to sort of be within that bullish lean on this time frame. Although once we jump into the smaller time frames, we can sort of pick our spots for some reflex shorts or reflex longs on any pullbacks. This candle this morning, we actually came up and rejected just above this Fibonacci. So it's always kind of interesting to see, why did we stop here? And I have this longer term Fibonacci here at 54.7225. If I jump back onto this chart, you can see it's the 11.4 retracement off of this. Let me go to a daily chart. So this was October low, October 22 low to all-time highs. This first retracement Fibonacci here is this level right here, this 54.7275. So that's kind of where we rejected off of this candle at the opening news on the CPI data. As far as where we're going to go today, I mean, we kind of have a range established here, this high, this low, and that can be kind of used as a decent sort of ORB type signal for the day. So if we sort of break out over this level, then we can stay pretty bullish in nature. If we start breaking below this 54.48, we can start looking for a bit more of a sell-off. And let's zoom out a little bit so we can take a look at what levels can we look to target. Well, we have some support down here at the 54.34, and then a pivot level before at 29. So this could be a decent spot to target on any short if we lose this candle here, and then just taking profits on the way down, and also a good area to look for a reflex bounce. If we start losing that, then we do have this area yesterday that I identified as a strong area of resistance yesterday, which could also be a good area ultimately to target on a short, and look for a reflex bounce on a long. If we do break out above here, I have a R2 resistance on a daily pivot here, and then this 78 Fibonacci just above, and the dotted line is actually a monthly pivot too. So we have a ton of resistance up in this 54.90 to 54.98, and obviously you've got a 5500, which I'm sure is going to be a key gamma level. So those are kind of the spots that I'll be looking for today. You've got these opening range type trades. Above here, we'll be targeting the basically 5500 area, and then below this 54.30 to 34 is the first target, and then 54.15 to 54.17 to 20-ish on the low side. So that's kind of the ranges I would expect today. If we get a really strong trend to the upside, maybe we can push above this level here. But this 78 fib should be a pretty decent spot of resistance, which within this pattern here is right over here. And then, of course, if we break over that, we're looking for the completion at the 55.46. So that's what I'm looking at on the indexes. I'd keep an eye on the SPY, because try and zoom in a little so you can see it better. So we're gapping up a little bit, and we have the 50-day just above us here. Right now, 543.74, but that adjusts. It moves with the price a little bit. And then just above that, 544.30, which is the 61.8 retracement off of this high to low. So keep an eye on the SPY because we are coming into some decent spots of resistance there too. So that would correlate to some of those resistance levels in the ES. So just keep that on your charts today. Keep a close eye there. Tesla is looking good. We took an entry yesterday in the weekly 215s and next week 220s. So those are looking good. End phase, I took a position in that yesterday. I wanted to wait for this 113 to break, but I got in a little early around 112, just with just kind of a gut feel based on this setup. I love to see these harmonics like this. You have your W, but in the middle of the W, you have an M, which is bullish. So kind of a smaller time frame harmonic in the middle of the larger time frame harmonic that kind of correlated and gave us an opportunity here. So we're gapping up a little bit. Maybe I'll take a little bit of profit, see how this area holds. This 38 Fibonacci at 113.09. Ultimately, we're looking for this 118.58, which would be the first target, and then 124.07 is the 61.8. Dan mentioned Microsoft. We took this day before yesterday off this 200-day hold, and we came up to this first level here. We took some profits in this already. If we can get over 415.09, then this can just continue up to this 21-day 418.96. I did end phase, did Microsoft, Tesla, Amazon, Dan covered. Right now, not anything else on my radar, but we'll see how things play out here today. If anybody has anything they want me to look at, throw it in the chat real quick. But just keep an eye on things because we are getting into this completion area. Like I said, we're only 60, 70 points away, which recently could be like a few 5-minute candles. But we'll see how things react here as we creep up towards 5,500. That's not out of the question today for sure. But again, this is a bearish pattern, so SMCI. Yeah, SMCI actually is coming up to this gap fill. Dan played that a couple days ago, and I think we still have some longs there in the room. So just beware that we're coming into this gap fill level at 590. But no reason why this can't keep going and even try and come and close the second gap, which would correlate close to this 200-day as well. So that's been a great play. We've had some really good, we were patient last week with that sell-off, and we picked some good spots. Amazon, I think we got in at this 160, we were looking at this gap fill here. We got in here 161, 162. David started some Tesla a couple days ago in the low 190s or mid 190s. Nvidia was a great play. Microsoft, we got a good pick there a couple days ago. So we've had some good plays here. So like Dan said, just be patient. Let's see what happens. Could very well keep grinding to the upside in these areas here. So right now we're just kind of stuck in this range, so there's not a whole lot to do until we get some sort of a breakout of these two levels here on the futures side. So just be careful if you are long and you see some profits this morning. Just take a little bit off the table, protect the bag. We did buy some protection last night as well, some SPY puts for today, which may expire worthless, but that's okay because that means that our longs didn't get destroyed. So that was the point. Just buying, like car insurance, you just buy it in case you crash, and doesn't look like we're crashing, but there is a chance that we do still. But we'll see how the day goes. And that's all I got.
Have a good rest of your day, guys.
We'll see you in the